Hey there, this is Brendan Stoneman with Remax Kelowna, and I'm talking to financial advisor Tom Gaymer. All right, so around the time that people are buying a property, I find is when they start looking at life insurance options and those types of things. And I know that most of the lenders or banks have a creditor protection or a mortgage life insurance product, which, you know, essentially you take it, if you die, the mortgage gets paid out. So there's obviously, I've heard pros and cons to this type of coverage, so I just wanted to chat with you about your thoughts on it.
Sure. So pros is fairly easy. Pros is it feels quick and it feels easy.
Right.
Done.
Tick a box and
Tick a box,
you're done.
done. Maybe tick 3 or 4 and done.
Okay.
In reality, what that initial ease and that upfront ease actually creates something potentially a lot more difficult down the road.
Okay.
What they're going to do is they're going to get you on something, usually on something called post-claim underwriting, which means they're going to do their due diligence as to whether you should or shouldn't have the insurance on the back end.
Wow.
Okay. So someone passes away, then they assess medically whether or not they should have had the insurance.
Okay, so that's when they start doing their homework and going through
Exactly.
medical records to determine whether or not you're covered.
Exactly.
Okay.
There are 2 main easy points as to how they typically catch somebody out. First one is, have you ever been tested for high blood pressure?
Okay. I don't think I have.
Okay. If they find a cuff reading anywhere in your medical records, by default, you've been tested for high blood pressure.
Wow.
Your insurance is now null and void, but your loved ones will get the premiums back.
So they get the premiums back, but not the mortgage payout that they were
Exactly.
anticipating.
Exactly.
Crazy. Okay. And
The second one?
yeah, what's the...
Second one's a fun one. Have you ever had or been treated for a gastrointestinal disease?
I don't think so.
If you've ever had the runs, or food poisoning, or Montezuma's revenge,
Yeah.
and you've had to see a doctor, null and void.
No way.
Yeah.
So all along you're paying your premiums, thinking you're protecting your family, and you know something happens, and you know there's
Exactly.
potential for it not to pay out, and you're left. So you said you get the premiums back,
Yep.
but you know you keep paying your mortgage like you did before.
Yeah. So now
Crazy.
imagine if your loved ones can't afford those mortgage payments,
Yeah.
the bank are going to repossess your home.
Unbelievable.
So another big concern when it comes to creditor protection is actually what's happening every time that you're paying back part of your mortgage.
Right.
So every time you make a mortgage payment, that's actually going to be decreasing the value of your mortgage.
Right.
Yeah. Do your insurance premiums go down with that as well?
I'm assuming not.
No, they don't. So what you're actually doing is you're paying a level premium for a decreasing benefit.
Right.
That just doesn't make sense to the consumer.